Hey everyone, this is Kevin Romines with Geneva Financial. In today's video, we're going to talk about jumbo loans. What is a jumbo loan? When is the best time to use a jumbo? And what's the best setups for a jumbo? Do you have to have mortgage insurance? Those questions and many more will get answered. Let's head into the office and unpack these details. Okay, I've made it back into the office. And one thing I want to let you know, if you like this video, please smash the like button and subscribe. There's many more videos that are going to be coming on very many different products, different loan types. And so there's a lot of good information that you can get. If you are in the market to buy a home or refinance, this is information that you really, truly need. So on to the first slide. What you need to know about jumbo loans. So loan limits are much higher than conventional loan limits. So the standard conventional loan limit in Washington State for the lower population communities is $548,250. If you get into the bigger communities like Seattle, King County, that kind of thing, then that loan limit is much higher. I don't know exactly off the top of my head what it is, but it's in the $750,000, $800,000 range on a single family. So what is a jumbo loan? A jumbo loan would be anything that would be over that limit. So in Lewis County, if I were to buy a home for, say, $750,000 and my down payment caused me to have a loan that was higher than $548,250, that's going to fall into a jumbo loan territory. So these are loans that are designed higher than Fannie and Freddie Mac guidelines on their loan limits. Jumbo loans require a higher credit score, and that's pretty true across the board. There are some of our investors that we can do maybe down to a 680, but generally speaking, you've got to have a 700 to a 720 credit score or better. So because there's more risk involved. So it's just one of those things. The more risk, obviously, they're going to want higher credit scores to offset that risk. Debt ratios tend to be capped at 45%. Fannie Mae and Freddie Mac, you could go up to 50%. FHA, you could go up to 56.9%. On jumbo loans, they're going to be a bit more conservative, so they're going to cap the debt ratio limit at 45%. Cash reserves are coveted by underwriting and may be required on all jumbo loans. There are some jumbo loans that may not have cash reserves, but especially since COVID hit, honestly, these things, they're going to have cash reserves. They're going to want 1 to 6 months worth of cash reserves in terms of what your monthly mortgage payment is going to be when the loan closes. So anywhere from 1 to 6 months, usually it's 1 to 3 months is what we're looking for. So besides your down payment, besides your closing costs, you're also going to have cash reserves. That could be money in a 401k that you don't touch, you just don't do anything, but you could access it if you needed to. Money in an IRA, money in a checking savings account, any number of sources that money can come from, but you must have it in order to close. Some lenders will require a second appraisal because they're just being cautious with the value. When you've got $1 million plus loan amount, lenders want to be sure that the value on that property is in fact, the $1 million that the purchase price might be. Jumbo loans will go up to $3 to $5 and even $6 million, and so with these loans being so much larger, there's just quite a bit of risk, and because of that, occasionally you're going to have a second appraisal. Down payments range from 10 to 20%. So that's really not that bad considering the loan sizes. And if you have less than 20% down, most jumbo mortgages will not require mortgage insurance. There's just no mortgage insurance that they want on the deal. So that's kind of an advantage over a conventional loan, whereas a conventional, if you have less than 20% down, you're going to have mortgage insurance. Jumbo loans have higher interest rates versus a conventional loan in most cases. Conventional loans are your Fannie Mae, Freddie Mac loans. They're going to be your best interest rates, but again, they're capped at $548,250 for the vast majority of counties throughout the country, with the exception of the higher cost counties that have higher limits. So interest rates, it's going to range anywhere from 3/4 of a point to as much as 2 points higher than a conventional. But again, it's based on the risk and it's based on the programs of the different investors. We have many, many different investors for our jumbo loans. Closing costs can run a little bit higher than a closing cost on a conventional loan. Primarily, the reason that the closing costs run higher is just your purchase price is higher. So at that point, your title and escrow fees are higher. Your reserves for your taxes and insurance included in your payment, that's going to be higher. So it just makes sense that your overall closing costs are a little bit higher. Not dramatic, but a little. But something to pay attention to. You may not need private mortgage insurance on a jumbo loan. I kind of touched on that a little bit earlier. Most jumbo loans do not require private mortgage insurance or PMI or mortgage insurance. It's one and the same, all the same. So that's an advantage over a Fannie Mae, Freddie Mac loan, and you can get that specifically with a jumbo loan. Should you take out a jumbo loan or a conventional loan with a piggyback HELOC to stay within the conventional loan limits? Let me explain that one just a little bit. So, as a matter of fact, I just closed one and I took a look at it and I said, okay, I could go jumbo without the mortgage insurance, or what I could do is my borrower is putting 10% down. I could go up to the loan limit on the first mortgage of $548,250, which I did. And then I followed that up with a line of credit behind that for another 10%. So it was a first mortgage at 80%, a second mortgage at 10%, and then the borrower brought in 10%. We did it that way because on that particular deal, it made more sense to do it that way as a lower overall payment. There's no mortgage insurance, and I got the benefit of the lower conventional rate on at least on the $548,250 loan amount. There was another $118,000 on the line of credit that we did, and then they brought in another, I think it was another $118,000. No, I'm sorry, it was $70,000. So, so I had my numbers off just a little bit. But those are the things that we got to talk about. It depends on where your property is located. It depends on the various products that are available through my investors. And it also depends on what are the conventional rates looking like versus the jumbo rates. Do I have to have mortgage insurance in either case? Or can I get it done in such a way that I don't have to have mortgage insurance on either loan? So those are some of the details that we've got to talk about that are very, very important. So that is the details of the jumbo loan. They're not overly complicated, and they're not something you need to worry about. Okay, fixed rates to interest-only rates with balloon payments. What is the best option for you? Well, there's a number of different options, and that's where it's just going to be very, very important for you to sit down, talk with me. I'll go through your options. I'll put them side by side. You guys can decide for yourself what makes the most sense for you and your family. At that point, we'll get the game plan nailed down, and then we're going forward, making this thing happen. So it's really not overly complicated. And last but not least, don't be afraid of a jumbo loan. Better yet, be prepared. Have conversations with me. Let's get that game plan nailed down. Let's look at all your options, figure out what the best overall monthly payment is, and what the best solutions are. If you need a line of credit, maybe a jumbo loan is not what you need. Or you can pair a jumbo loan with a line of credit. So you can do those two options as well. It depends on, are you going to have a need for future cash off of that property? So that's where a line of credit would be beneficial to be paired with whatever loan you're going to have, whether it's a conventional first mortgage or it's a jumbo loan. So give me a call and let's talk about it. Okay, that was just a quick rundown of some of the details on a jumbo loan. I hope you learned a little, and if you have any questions, that's the big thing. Just get a hold of me. We'll work through it. We'll develop your game plan, and then we will get you that home of your dreams. Typically jumbo loans are your move up loans. So it's not certainly your first purchase in most cases. So you're coming to the table with some of the equity, some of the cash that you got from the sale of your previous home. Okay, so next, what you need to do is watch this video that's over my shoulder here. Go on to the other videos, learn a bit more, and as you learn, as you have questions, give me a call, give me a text, email me. I'd be happy to help you out. All right, until the next video,